Today, the value of the pound is down, the cost of servicing debt is up, and the Chancellor Rachel Reeves is nowhere to be seen. Yes, my name's Tom Harwood and this is the GBNews Originals series. Today we're looking at what on earth is going on in the financial markets. An urgent question was brought before the House of Commons to demand of the Chancellor to make a statement about what's happened to gilt yields, the cost of servicing government debt. Higher now for the 10-year gilt yields than at any time since the financial crisis in 2008. For longer-term debt, higher than any time since the 1990s. Yes, both of those measures higher than the financial turmoil we saw under Liz Truss. So if debt is now more expensive today than it was in the immediate days after the mini-budget, the consequences of which have been argued to have defenestrated a prime minister, what on earth is happening right now? Well, one of the arguments about why the cost of debt has risen quite so sharply and quite so suddenly in the United Kingdom is a delayed effect from the budget that Rachel Reeves delivered towards the end of last year. That budget raised borrowing by billions. Yes, journalists liked to focus on the tax changes, and indeed there were hefty tax rises. Tens of billions of pounds of tax rises, not least for national insurance, the cost of employing individuals up and down the country rising considerably for businesses in an attempt to rake in over 20 billions of pounds in extra tax. But it wasn't just the tax that rose, no, far from it. Tens of billions of pounds also were raised through extra borrowing. How on earth could this happen when the budget is policed by the Office for Budget Responsibility, when the Chancellor has to stick to certain rules about debt? Well, she changed those rules. Yes, instead of measuring the traditional measure of debt in the United Kingdom, Rachel Reeves moved to a completely separate measure of debt that took a different account of the net financial liabilities and assets that the Treasury holds. This was argued to free before the budget up to £50 billion of extra borrowing. In actual fact, a fresher assessment of the rule change allowed the Chancellor to borrow around half of that, £25 billion. The number she chose to borrow extra over and above the borrowing of the previous budgetary period was £24 billion in that first year, almost doubling to over £40 billion by the end of the Parliament. Yes, it will be £41 billion extra by the end of this Parliament, and that's the annual figure. Cumulatively, that's over £140 billion of extra borrowing. And it seems that part of that borrowing bonanza has led international markets to think that the UK isn't quite as trustworthy as it once was in its ability to pay back that debt. Yes, there are consequences for borrowing tens upon tens upon tens of billions more. The consequences are higher costs to service that debt. We already spend more on debt servicing payments than we do on the entire school's budget, and that looks to rise even further still. The Chancellor left a little bit of wiggle room within her fiscal rules in the last budget, but for every pound that is spent on extra debt servicing charges, that's a pound less of wiggle room the Chancellor has. That's a pound that could be seen to be being taken in extra spending cuts or tax rises if the cost of debt interest continues to rise, if gilt yields continue to soar. It's a concerning picture, coupled with the fact that the pound has lost value this week. In fact, it's lower now than it's been in the last 14 months. That's a considerable change, and it shows that international markets have taken a dim view of the confidence that they once had in the United Kingdom. Yes, it seems that the world is looking with sterner eyes at the United Kingdom and indeed the solvency of this country, leading to one slightly hyperbolic Bloomberg financial headline today, suggesting the UK could be heading for a moment akin to the debt crisis this country saw in 1976 that led, of course, to that IMF bailout. Well, today on GB News, we sat down with Mark Littlewood, the director of the Popular Conservatives Group, the former Director General of the Institute of Economic Affairs, to work out what on earth is going on. But Mark Littlewood, I was told repeatedly by members of this government, by the Chancellor herself, that she's fixed the black hole in the public finances, that there was a £22 billion black hole and that has now been plugged. Although looking at the numbers in the budget, the Chancellor borrowed £40 billion extra. It's remarkable how little commentary the tens of billions of extra borrowing that the Chancellor engaged in actually got, all because she twiddled a debt rule.
Yeah, that's right, Tom. And of course, I would argue that they've shown considerable largesse on public expenditure as well, giving people who work on the railways a kind of no strings attached pay rise. So there doesn't appear to have been any drive to get spending down. And I think one of the things the markets will look at is the trajectory we're on. You don't need to solve Britain's entire fiscal problem by, Thursday week. But you do need to show people that you've got a serious plan to get it under control. And it's not obvious to me that Rachel Reeves does have a serious plan to get it under control. We are spending beyond our means. We have been doing so since 2001. That was the last year a government of any stripe balanced its budget. 25 years of the government spending money beyond the tax receipts and other receipts it brings in. That's a pretty bad state of affairs. Now, the government will say there are international headwinds here. That's what governments always say when things look pretty grim. But I'm always very fond of Warren Buffett's observation that when the tide goes out, you get to see who's swimming naked. And unfortunately, the UK economy is basically swimming naked. So I think at some point, this government's going to have to change course.
It's a testing time for our politics. It's a trying time for what on earth is going on across the financial markets. But it puts particular strain on the political and financial reputation of Rachel Reeves, the Chancellor. She said that she would be a safe pair of hands, a steady hand on the tiller of the United Kingdom economy. But after the wobbles that we've seen in financial markets today, after the soaring cost of debt interest, after her borrowing bonanza in her budget, coupled with those growth-crushing tax rises, have we headed for the worst of all worlds? Inflation up, borrowing up, debt up. Could we be heading for yet again what we once saw as stagflation? Amidst it all, growth has been negative over recent months. Yes, a contracting economy on month-by-month data. It's not a rosy picture, and it's clear to see that international markets are treating the UK with an abundance of caution. It's a politically perilous moment for Rachel Reeves, who is due to visit Beijing. Should she be staying here in the United Kingdom, keeping tabs on what on earth is going on in the city and the wider global markets? What on earth is happening to the reputation of the United Kingdom? Could the Chancellor still be in her job this time next year? All pertinent questions, and one will be following here at GB News. So be sure to subscribe to the GB News YouTube channel for much more content looking at the future of the Chancellor and the future of the British economy.